you don't like it, you get your money back. Basil Chapman, what's going on?
What's going on is that we actually have a minus sign here, and this is going to be very interesting. If I said to you that the Dow was down 300 points, you'd say to yourself, well, I wonder what the other indices are doing. And it feels kind of bearish. And yet yesterday we were up over 400 points. So I'm kind of fascinated. I've got this tool that I've used for some time. I call it the Dark News Cloud Cover. And basically what it says is I kind of lighten it and darken it as we're moving along. And I treat it as if, what is the market? How is the market responding to the news? And what is the news exactly? So we've had themes over the last few weeks. We've had the increase in coronavirus. We've not had an increase in deaths. And to me, that's really the most important thing. If there's an increase or a decrease in the deaths, but the numbers of coronavirus, the people that are affected has increased tremendously, certainly in your area down in Florida.
Yeah, we hit 16.5% today.
I mean, those are big numbers.
Yeah.
But as I say, I think that the market is going to respond if you start to see an increase in the fatalities. And that's, to me, very important, because that's really what it's all about. Because part of this process is really immunizing people. So it's kind of what you expect from these major outbreaks, these pandemics. So that's the one thing. The other is, now we have no choice over the next many months going into November, the first week of November, to be talking about the politics of politics. Not who to vote for or anything, but just what's going on that is impacting the market in terms of President Trump, because he's the boss right now, so we've got to deal with that. And when I put it all together, I still think that we've got this dark news cloud cover hanging over, but look at this pattern that we've formed. I call it the lowercase h that goes to the lowercase m. This is so far, it's the same pattern that we've seen from back in August, right here. It's the actual decline started around about the 2nd of August of 2019. And then what happened is there was a sharp decline and then a bounce, and then there was a lower low, and then another bounce that didn't take out the left side arch high, but it pulled back and it didn't take out the left side low, and that was it. And then there was this huge rally. So I'm saying, are we matching this? So far, there's a match, because now I can get out of this. I want to show you the real thing in a different outlook. So let's get out of that. So here it is. I've been discussing it. I drew it in. I said the lowercase h pattern. I'll just explain that just briefly here. And let me go to this chart over there. So let me just show you. It's this pattern that I talk about. It's this one here where there's a mix of a straight line and a cup. This one here looks like a lowercase h. If you take out that left side low, you can go quite a bit lower unless there are strong technicals to support the right side. And so far, and if it doesn't take out the left side low, it can make an H, another arch formation. So the lowercase h can go to a lowercase m. So what I said today in my show, the Tiger Technicians Hour at noon, I said, this is really a very important period. Why? Because the Dow is still in this H pattern. The S&P had quite a bullish breakout, if I can just get to it right here. And you'll see that there's a slightly different pattern. Look, it went to a higher level than that left side arch. That usually is a good sign, because you want to see the MACD, which is just crossed positive. So there's a real mixed market. What I'm looking at is that the Dow and the S&P are attempting to hold support. You've got the QQQ, which is now the most, and I spent some time today looking at stocks that are involved in the Invesco QQQ Trust Series. That's the Index 100. And now we finally got that arch that successfully crossed over the high, and now it's gone to an all-time high. Today it hit 260.88. But what is it in? Here's another one of the techniques that I use in the Chapman Wave methodology, and that is looking for the fourth highest peak, and I'll label it A, B, C, D. That fourth highest peak is called D. So in the Chapman Wave, we're always looking for the low bar, try to count each successive higher peak, You can go all the way to E, F, and G, but it's right here at the fourth highest peak that other things can happen.
Now,
so
Basil, is that on the daily? It's on the fourth highest peak?
This is the daily is in a D, so this it's only in a leg C in the weekly, so the Qs are still very positive, and leg D in the monthly chart. So I wanted to explain that this is a real potpourri of different time frames and different indexes. Look how weak the IWM is, which is the Russell 2000. So this is very important. It hasn't even got close to the left side arch. So this is one of the weaker indices, but it's already done a peak D in the weekly. So we're looking at, I don't recall seeing quite the differences between the leading index and the weakest index in a long time. So I have to talk about this as a diverse market. For subscribers to my opening call, we're still long. Most of our positions, we've kept our core positions. We had one today that actually went, it was up 70% since we got it. It was up today about up 2.5%, it's now up about 3.5%. And a day like this, that's really, that's what you want to see. So I've been very careful to try to select for subscribers to my opening call fairly low price stocks. So this particular one's single digit, and trying to identify stocks that are in the right sector. This is a small biotech that can, instead of having $100 or $200 or $300 stock, we've got something far lower in price that has the same potential for percentage gains. And I found that it's a little bit safer if you aren't in those spectacular stocks that are going to the moon, like the Apples, etc. That's kind of the way we've been trying to play it, picked up. And I think that now, if we start to see the first tier leadership start to pull back, we might see the second and third tier. So we have another stock called Upwork Inc., connects the businesses with freelancers and independents. We bought it down the low 13.24 and 13.88 area, up to 15.18, and today it's having an update. It's up 2.7% at 14.83. And what I show my subscribers, and one of the things that I do for subscribers, is I diagram what we're looking at. You can see right here, there's a cup formation. I call this a Chapman Wave cup and ladle, because if you take out the left side lip, and you can see it right here, they peak on the 14th of May at 14.20, peak F, and we pull back, turned around, started a buy mode when peak A, B, and I said if it breaks out from here and goes to a leg C above 1420, that's called Chapman Wave cup and ladle breakout pattern.
I think you're getting me hungry. I think I need some porridge. Some porridge and some salmon so I can short this market.
Yes. So in the meantime, we're being very selective. I'm saying be somewhat careful now, because we've got leg Ds and many of these key stocks. Just be a little careful.
Listen, man, you have a great one, safe one, Basil. We look forward to the show tomorrow.
Thank you very much, Tom.
Thank you. Stay right there, folks. Come right back.